Welcome back to Trading Rolly. This is going to be Stock Watch, all stocks in this video. So if you came for crypto, you'll have to wait for the next one. I think it'll be easier to do topic videos, make the videos shorter, easier to digest. So we're going to jump into the stock market. It's been heinous, been dropping all week. Is it time to buy the bottom? Are we calling a bottom, or should we be a little bit more patient and look at some of the indicators? I'm looking at the indicators on the daily. It's telling me be patient. All right, so go ahead, hit that like for me, comment, subscribe, tick the bell for notifications. These are my own ideas and opinions on the market, so please do your own research and trade at your own risk. We'll jump right into S&P 500. I was looking at, a potential symmetrical triangle here. We did get the bounce there, but unfortunately, after earnings reports from Faang, Facebook, Apple, Google, Amazon, to me, I thought they were pretty decent. In fact, the earnings per share, beat on pretty much all of those, but they were expecting something a little bit more. Who knows? Or maybe it was just inevitable we were going to sell today regardless, and this was just a bit of a dead cat bounce. Regardless, we did take a tumble. We dropped farther. So this is invalidated. We could draw it right there. Still slightly upward sloping. But, like I was saying, it's, looking like it might kind of hit a flat top of support, which could turn into a type of a descending triangle if you do get a rally to fill this up. There's a lot of uncertainty. We've been speaking over and over again with the election. Next week, a lot can happen. Election day is next Tuesday, but people are mailing in their ballots, so they have to wait till at least next Monday, I think, to get a final count, unless there's just a clear winner, just a runaway landslide victory. But if it's close, it's going to be some time. So next week could be choppy and volatile as well. I was looking at, so if I go back to that potential symmetrical triangle that I had drawn originally, if we lost that and say you measured from there to there, your measured move here would take you down to a 0.5 Fibonacci retracement on the S&P. So your swing low to swing high, the 0.5 is coming around, let's say 2,900. Currently we're at 3,270. So the measured move just on this pattern, it doesn't have to play out this way. And, technical analysis is just looking at all types of possibilities, just to be aware, right? Just a probability guessing game still. Anyways, the 0.5, which is a perfectly natural place to have a full retracement. I mean, not a full retracement, but a healthy retracement. After a large move like that, it's not out of the ordinary to get a pullback. And, anywhere between 0.33 and 0.66, 1/3 to 2/3 of that swing, anywhere in that zone is fair game. If you're using Fibonacci, the 0.382, the 0.5, and then the golden retrace is 0.618. So it could come down even further. But, you can see some cluster here, maybe some confluence down there. So this could go a lot further is my point, especially if we continue to have record COVID cases, continue to have lockdowns. Europe is locking down completely. So, different sectors are going to get hit hard. If we have more lockdowns in the U.S., some of these sectors are going to just, continue to tumble. And this could bring down, this index of the top 500 companies. So we could see a pullback there. Looking at NASDAQ real quick, they dropped a lot harder than the rest. Tech really did suffer the worst today. But look at this run up that tech has had at the same time. And, still within a symmetrical triangle type pattern on NASDAQ. So not something to freak out about. We could get a bounce next week depending on what happens. But I think there's a possibility. I mean, we could come down farther. If you take away this drawing here and just look at it, a naked chart, you have a double top, lower high. If you lose this level here, we could come a lot farther down. We could do a fib retracement on NASDAQ real quick. Might as well. Let me get my fib out. All right. Swing low to swing high. So we're bouncing around the 0.236. Your 0.382s at 10,248. We're at 11,052. Your 0.5 would actually be a retest, if you can see that, a retest of our previous high before the sell-off, before the pandemic sell-off. This was our high around 9,600. That would be your 0.5 fib. So could we come down to retest that previous high? That, you know, in the scheme of things, in the macro level, and we just zoom out, that wouldn't be that crazy. I mean, if you zoom out and you look at the past, 20 years, we're still on a ridiculous uptrend here, guys. So if we came down and tested, say, this level and got a bounce and then continued, that would look pretty consistent with how things have been going. All right, you're not really losing that uptrend. So there could be more downside. And to show this point more, I'm going to just jump through a few of the equities. And something I've been looking at is the daily stochastics. All of them are down. They're pretty low, but I'm waiting for them to turn up. So let me just show you a few examples, and you'll get the picture pretty quickly. Okay, so let's go over to the equities. We'll just pick a few. Apple, we'll start with Apple, go to the daily. So some people, CNBC, I was watching a little today, they were saying, yeah, I'll buy into Apple, Facebook, Google, Amazon at these levels. They're down 15, 20% from their tops. It's a good discount. And overall, I agree these are great companies to own over the course of the next few years, 5, 10 years. We won't even remember this. Okay, I think these companies will be worth a lot more, and your stocks will continue to go up as they do over time. So, yeah, you're not in the wrong for buying a great company like Apple, but can it come down further? Can you get cheaper price? Is what we're looking at. So let me show you the indicator. Hold on. We'll throw on our moving averages as well just to check that out. So our moving averages are stochastics and our RSI on the daily. So breaking beneath our yellow 21 EMA, beneath our blue 50 simple, you have your 10 simple and yellow 21 EMA bearish cross. Beneath that, that's not good. Your stochastic is coming down. It's low, so we're waiting for it to cross back up. As you can see here, when you had that cross up, you had a nice rally there. Cross up, decent rally. It got faded, but we're looking for that cross up. You still have room. You can, on this sell-off here back in February, March, you bottomed out. Well, actually, after you bottomed out on the RSI, you continued to come further in price. You had bullish divergence on the daily RSI, and then once you broke back above the yellow 21 EMA, we stayed above pretty much for 5-6 months. So that's what I want to see. I want to see us cross back up on the stochastics, and I want to get back above those moving averages. So now that I've explained that thoroughly, we can go a little quicker through some of the other ones, and you'll see a lot of similarities. AMD, great potential down the road. This one actually has crossed up today, okay? It's a down day. So I'm going to be a little patient on this one because I want to see it cross up, but I also want to get back above these moving averages. You can see here when you got back above all of those moving averages, that's when you had the real rally. Okay, so we're in the bearish territory right now. Amazon's still coming down, looking for that cross up. You've big close beneath all of your moving averages there. You have support. Your 200 EMAs down at 2,700. Your 200 simple green, the dark green 200 simple 2,600. If we have a market wide, I said systemic yesterday I meant to say systematic. They're pretty similar, but a systematic risk sell-off where all markets are affected. You could come down to test that on Amazon. Boeing is just beneath all of these moving averages. Your stochastics are still coming down. Let's look at Alibaba. Alibaba actually performing better than some of the rest. This is Chinese stock though, so it's not going to move exactly the same. But also the stochastics are coming down. I do like that it's maintaining above the yellow 21 EMA just for now. Canopy growth. Canopy growth could have a nice breakout, especially with the blue wave if the Democrats take over. But again, your stochastics are coming down. Costco, stochastics down, testing that 50 simple. Need to bounce here. If not, you could come all the way down to 326 on Costco. You know, this is a market-wide dump like March if that happens. Disney is flirting with its 200 simple. It's beneath its yellow 21 EMA. Stochastics are coming down. Facebook, your stochastic crossed down. It was having a nice little rally off of Snap's earnings. So when Snap had really great earnings, Snap went up 25%. Social media, Facebook, Twitter, they all rose with it, but had a sell-off with the rest of the market today. Crossed down beneath your 50 simple. Could come all the way down to 236 is your 200 EMA, 226 200 simple. If you get a large, something like this where it's just you weren't safe holding anything, you could come down there. Maybe we get a bounce next week, but I'm going to want to see these Stokes cross back up. GM, I like this play as, this has been the sleeper I've been talking about. They're going heavy into the EV field, competing with Tesla down the road. They got the electric Hummer came out, but your stochastics are down. The good thing about this is you're still putting in a nice uptrend and you bounce on that yellow 21 EMA. So this one looks a little bit better. I'm going through a lot of them. Let me skip a few. PayPal had, the big Bitcoin news and, selling off here though. And you're beneath your 50 simple. You could come down, test 163. We're at 186. Your stochastics are down. You notice how all of the stochastics are down. Qualcomm 5G play. I like it's above the 50 simple, but we want to get back above all of the moving averages. A bounce off the yellow 21 EMA would have been good. You see it bounce off the 50 simple and then had a nice rally, bounce off the 50 simple. So you want to keep above that. Otherwise, you could test much lower. But I'm going through all of these. Roku, stochastics down. That's a pretty big dump. The uptrends are in a dangerous time. I don't know. I want to find a better way to say that. But basically, we're looking at a tipping point. The markets need to bounce next week pretty desperately. Otherwise, I could see us putting in a continued downtrend in the short term until maybe we get that clear winner. Maybe we find out that COVID isn't as bad as it was. The mortality rate is going down. I've heard the COVID has mutated. It's spreading easier, but it's less deadly. Who knows? That could be good news. Or really, we just need the stimulus. Unfortunately, for the market to have to rely on stimulus, kind of sucks. But in a pandemic, that's natural, right? Okay. If there was no pandemic and the only thing holding us up was the Fed and stimulus, well, that would, mean that this market's just being propped up. But we need stimulus, not just for the stock market. A lot of people on unemployment, a lot of people lost their jobs and will continue to lose their jobs during the winter season. So markets could have a nice little downtrend for the short term. Anyways, what I'm looking for before I want to get bullish on anything is just to see these daily Stokes at least get across up here. Right now, they look like they're going to drop off the edge of a cliff, which, look at this. This is square. The run up from the bottom, that's a 400% gain. All right, so we might have a couple down weeks. it's not a big deal. You know, if you came down to your 200 simple, that would, from the high, that's a 33% drop. Won't feel so good if you bought up here, but you know, if you bought down here, say you were the lucky one that just bought the bottom, and you watched your stock go up 400%, and it drops all the way down 33%, you're still up 200%, and could get a bounce there, and then, you know, continue the uptrend. So something like that. So it just depends how you want to play your game. Are you trading on a short term, you know, with an intraday basis, or are you looking to, you know, build a portfolio for retirement? It's tough to say, you know, which is going to be the better strategy. Okay, so I mean, for each strategy, you're going to have different ways to play this, but way I'm playing it as far as adding back into any positions is I kind of want to see this sell-off finish, the dust to settle, get back above these key moving averages. Like after this sell-off, once you got back above them all, you had a nice rally. You know, we want to see this cross up and have it, you know, rising stochastic back to the top above all moving averages. And this is pretty much all of the charts that we've been looking at. You know, Walmart back beneath 50 simple, stochastic down. Zoom, this is the last one we'll do. Stochastic down, hopefully bounces off the blue 50 simple. Otherwise, you could come further down. All right, so a lot can happen over the weekend with headlines. A lot can happen next week. So we'll just have to play it one day at a time. But patience is the key. Especially with the stock market. You know, if you're playing the long-term route, we all know that over time, as long as you're picking, you know, the right ETF, the right index, you know, good companies that have charts that look like this, you know, you're going to have some dips, but they usually bounce back. All right. That's going to be it for me. Hit the like for me one more time. Helps the algorithms. Maybe I'll get some new stock market subscribers, and I'll do a Bitcoin crypto video soon. That's going to be it for me. Roll.